Hello, welcome to Geojit Spotlight. Recently, the market has been drifting without a clear direction. There is no sustained up move or continuous down move. There are no triggers for a sustained healthy rally. Even mild rallies are met with sustained selling by FIIs. Since DIIs have been buying the dips and this trend is likely to continue, there is no possibility of a sharp breakdown either. A positive development for the market would be a US-India trade agreement, but this has been in suspense for quite long. We don't know when it will happen and also what the outcome will be. Another event which the market was focused on was the US Supreme Court ruling on the legality of the Trump tariffs, but this ruling also did not happen. In the near term, the market will be responding to the Q3 results. The IT results from the IT majors are reasonably good and the management guidance is better than expected. So this segment will provide resilience to the market. The Q3 results from the banking segment also is expected to be good, going by the credit growth data for Q3. ICICI Bank and the State Bank of India are likely to report best-in-class results. The global geopolitical situation continues to be a matter of concern, particularly the developments in Iran. The likely developments in Greenland is another area of concern. With Donald Trump as US president, anything can happen anytime. So what should investors do in this highly uncertain and volatile situation? Keep in mind the following facts. 1. Large cap valuations in India are now fair, but not yet cheap. 2. Mid and small cap valuations continue to remain high, but there are segments in the mid cap section where the growth prospects are bright. 3. Q3 earnings will be good and the Q4 earnings are likely to be better. The market needs positive triggers like a trade agreement and indications of sustained earnings growth. In such an uncertain context, it is important that investors take a long-term view. From a 3-year perspective, India's growth and the corporate earnings prospects are bright. Therefore, investors can utilize weakness in the market to slowly accumulate high-quality growth stocks, particularly those that are available at fair valuations. Leading financials, particularly leading banks, leading automobile companies in the two-wheeler and passenger vehicle segment, leading cement companies, leading non-lending financial services companies like stock exchanges, companies that will benefit from boom in discretionary consumption like jewelry, travel and hotels. High growth companies in the digital platform space are some of the segments worth watching.